In a world where even the smallest disagreements can lead to arguments, violence, and even death, two brothers tackle the difficult subjects. This podcast is not just about dissecting topics from two different perspectives. It's also about how to have conversations on difficult topics while avoiding the urge to tear someone's head off and vomit down the bloody stump of their neck. All right, we're talking about the optimal taxation system, besides the one where no one gets taxed.
Yeah, that would be nice. I think tax is necessary. Even as a libertarian, we realize that government is necessary. There is a role. It's minimal, obviously, but tax is necessary.
All right. Well, we agree on that one. So that's a good start. It's always good to build from a point of consensus.
Yeah.
If I were to speculate a little, I'm guessing that you align more with the proportional tax system. I'm more of a progressive tax kind of guy. Is that kind of lay things out more or less?
Yeah, I think so. I could be swayed to be somewhat progressive, I guess. It's just a question of how much progressivity, I guess. I mean, nobody. Yeah, I mean, not even libertarian. One of the kind of the figureheads or the most well-known, at least 20 years ago, libertarian economists would say that everybody should pay the same amount. I think he talked about having, instead of having all these different programs, doing a negative income tax for people at the lower end. So, for example, you might say, well, everybody at least earns $20,000 or at least earns $30,000, and let's say you earn nothing. Well, then we'll give you $30,000. You earn $10,000. We'll give you $20,000. We'll give you $20,000 to get you to 30, and so on. And there's even been talk of some incentives. Because I think many of the problems that people have with some of the social programs now is there's an implicit tax in them. And you and I have talked about this in previous programs where, for example, if you get a certain benefit, say Medicare or food stamps or welfare, well, at a certain point, that benefit goes away. So some people are caught, man, if I get a raise, if I'm making $31,000 and I get a raise to make $32,000, all of a sudden I lose my whole benefit, which might be $8,000 of benefit. So unless I get a $9,000 raise, maybe I don't want it because of this implicit tax. So in that negative income tax, maybe you could say something like, well, listen, if you make $10,000, we'll give you 20. If you make 20,000, we won't just give you 10, we'll give you 11 or something. And then there's this benefit, and we don't cut it off right at 30. If you make 30,000, we'll give you another 1,000 or 2,000. I don't know. Maybe some economist would come up with a way to make it more really, people are incentivized and not punished for making more money, if that makes sense.
Yeah, it does. Now, this system that you have of sort of, I don't want to call it a basic income because I'm sure they didn't. You said this was put forth by a libertarian economist?
Yes.
What was, out of curiosity, what was his name?
Milton Friedman.
Okay. Heard the name, don't know a lot about him. Okay, that's interesting.
Yeah, in fact, he liked it better than, because they talked a lot about that basic negative, or what is it called?
The basic income, right?
Yeah, it's not basic income, but for some reason we're missing the name, but universal basic income.
Okay,
yeah,
right.
Basic income, universal basic income.
Sure.
So, and he didn't like that because there's a lot of waste there where, it's a step in the right direction, but there's a lot of waste because if somebody's making 200,000 or 3 million or something, then they would still get the universal basic income. And even if you said, well, we'll cut it off at a certain point, once again, then you have this cliff where somebody says, well, I don't get the universal basic income after 30,000 or after 30,000, 50,000 of income. So the negative income tax is supposed to make, we're taking care. And by the way, when we talk about these programs, universal basic income or negative income tax, the idea would be to do away with many of, if not all, of the other social programs and say, okay, we don't have to worry about these implicit taxes. We don't have to worry about all these other things. Let's just get this money to these people in an efficient manner that doesn't give them a disincentive to work. Mm-hmm. And so that negative income tax then is a little bit more efficient than universal basic income because everybody's getting at least 30,000, and you don't get punished if you pass a certain level, and it doesn't go to everybody. So that was why he liked it. If we're going to have to do something, let's do the negative income tax, and then maybe put some incentives in it, and think hard about the unintended consequences and the incentives of that program. But for example, if you were, I guess the reason I was bringing all that up, I don't want to get, we kind of got sidetracked into that because I think it is an important point. But the whole point of it is to say, even a libertarian, I mean, that's progressive, right? Because you're saying, well, listen, maybe we all have to pay taxes, or maybe they kick in at a certain point, and maybe the number's not 30,000. I was just throwing that out there. Maybe it's 50,000 or 60,000 or something like that. But you'd say, okay, well, you're still. Let's say, for example, you had sales tax, and it's across the board, and everybody is paying sales tax. Certain items, I don't even like the idea of taxing certain items at higher rates, because I think then you get all of this. Everybody's playing with it and trying to get their truck is a work truck, so it shouldn't be taxed as a fancy truck, or something like that. And you're going to have all these people playing games with things to try to lower their tax rates as companies that are selling and say, listen, don't tax what I'm selling at the higher rate because it's not a luxury item, it's something else,
Right.
So I would say just do it a flat tax, something like that. But even if you said that flat tax, that's very progressive, because you're saying, okay, yeah, everybody has to pay it, but we're going to make sure that these people here at the lower income levels are taken care of. They're going to get a certain amount because we're all going to be making 60,000 or 50,000 or whatever the number is. And so that way there is some progressivity there, but it isn't as progressive in the sense that once you get to a certain level, let's say 100,000, yeah, sales tax is sales tax. Everybody's paying it. Obviously, the wealthy people pay more because they take more vacations, they buy more stuff, unless they just invest it all, which then, great, they're investing it all, and it's coming back to the economy, and we like that, I guess they could put it in the bank and not do anything with it. Well, okay, well, that's fine. They do avoid the taxes there, and I don't really care. There's going to be plenty of taxes paid. And if we didn't have, all these people getting income taxes, every paycheck would be bigger. They could afford some of these sales taxes that we have, things like that. Does that make sense?
Yeah, and actually I wanted to ask you about that, because I know in our last conversation last week, you had mentioned that in Oregon, they don't have a sales tax, but they have a higher income tax. And from the outside, the obvious is that, like I can sort of imagine where that difference is. But in terms of your living situation, do you notice a big difference, and how does that difference manifest itself?
I saw a bigger tax bill. That's typically where you notice it. But yeah, I guess it probably would make a bigger difference to me if I were just starting out in the workplace and making more of a starting wage. But because when you have these withholdings, that's where you're going to notice it, is in your withholding taxes, that there's a higher one there, and then your tax bill at the end of the year. It is kind of nice not to have the sales tax. People, it's probably good for tourism, because people coming in are always great. Either they know about it, or they're like, oh, there's no tax. Oh, cool, that's awesome. And it probably is fun to come to a place where there's fewer sales taxes. But I don't notice a big difference. And by the way, I would say it's not just the income tax where you notice the difference, because we talked last time as well about the permitting for building houses. Which is also very high, which I would call that a tax too, because the government needs to get funded somehow, and they're going to be looking to different places. I don't notice high property taxes, which is good, but I do notice, yes, the new builds, the permitting process, aside from being very involved in a lot of environmental concerns that sometimes seem unnecessary, there's heavy permitting costs. So yeah, I would say, and I don't know enough about the tax structure. We'd have to talk with a tax accountant. But I would say, yeah, you see a higher income tax, a slightly higher income tax, and then you do see those permitting fees, and there's probably other areas that it manifests as well.
And I don't know if it makes a difference in terms of the overall conversation of looking at individuals' taxes, but I think it is worth noting that at least in this country, the income tax it usually goes to the federal government. There is an income tax and a sales tax that goes to the state. You have things like property tax, which goes into your schools and some local government. You have the permitting fees that are supposed to go into really a very localized economy, making sure that all the building is done safely. Of course, it doesn't always happen that way. In other countries, it's not quite as divided that way. In Europe, they have the countries will often have their value added tax, which is a sales tax. So they usually have a higher sales tax. And I think it is worth mentioning that when we talk about the optimal tax situation, I do think a sales tax put forth by the federal government might be one to consider, because instead of taxing the money as it comes in, you're taxing the money as it goes out. The advantage being there might be a mild encouragement not to send as much out. And so there becomes a subtle way to encourage savings. And as we know, in this country, there is a problem with savings. There's often a negative savings rate. People are spending more than they're actually earning. So maybe that would be one incentive to encourage the savings. The other thing that could happen with that is first of all, in Pennsylvania, there is not a tax. There's no sales tax on clothing. Now, where I live, I'm about 10 miles from the New Jersey border, about an hour and a half drive from New York City. And there's a retail outlet mall here in town. And we get a lot of tourists that come in, especially right before school starts, where people are buying clothing for their kids for the school year. And just, there's buses that come out just to go do clothing shopping at the outlet malls. Now, we get that benefit because we live close to those communities where they have higher taxes. And of course, someone out in Pittsburgh is not going to see that same benefit. Pennsylvania is a big state. They're not going to attract a lot of out-of-state buyers except in certain areas. So not everybody gets that same benefit, but it is interesting to consider, if the federal government wanted to, for example, help people that were maybe not making as much money, they could offer a credit for food purchases or some other, maybe for housing purchases or something else. Housing's not really taxed, but there's other ways that that could benefit those that are not making as much money as other people. Rather than getting a tax credit at the end of the year, it could happen actually at the point of sale, at the purchase.
Mm-hmm. Yeah, I like that. I think we talked about incentives last time,
Mm-hmm.
and unintended consequences. I think one of the things that causes I don't know how you like a pacification of the people or something. When taxes come out of your paycheck and you just don't see it, I think you tend to not think about it. You tend to not worry about it. If I would say two things. One, if they said, instead of us taking it out of every paycheck, you have to cut a check at the end of the month, or you have to cut a check at the end of the year, then I think people would be they'd be fighting much harder against taxes and be talking about it a bunch more.
They'd be more aware of it.
More aware of it. And sales tax, maybe the same thing. The other thing I would say about incentives is one thing that we should think about, I do like the sales tax. I agree. I think that's a good program. The one thing that in any program, whatever it is that we put into place, we should be worried about is loopholes and exceptions and things like that. Because I think what makes our system so complex is all the deductions and the changes and whatever, like all these different weird things. I mean, that's one of the things, I think that's one of the big things that Reagan in the 80s, when he reduced taxes, I mean, part of it was this idea, as we talked about last time, they made the caricature of trickle-down economics, but the idea essentially was, if you could broaden the tax base and and lower the actual marginal rate, then people don't have an incentive to be looking other places. Then you're gonna increase the tax revenues, and by broadening the base, you're saying, okay, let's get rid of some of these deductions and these exceptions and credits and everything else because we don't need all of them. And if you just make it simpler, because I would imagine even if you got a sales tax system in place, immediately then you'd have these lobbyists saying, oh, but we can't have sales tax on research and development. So if it's research and development, then we, oh, well, we can't have an investment in real estate because we had the 1031 exchanges before. We want these people to have houses. And, oh, but we don't want it in, on foods because on the staples because, the poor people are going to have that and they need to be able to afford their food and everything else. So then it would become this very complex system and it's almost, I would say it's almost impossible to avoid. So hopefully we could start out as simply as possible and then make, over time, I think it's going to become more and more complex and there's going to be all these, masses of loopholes and adjustments and everything else. And then hopefully we can reduce it again, because I think that's the real problem with the tax system, that instead of just getting an index card like was talked about under Trump, that I don't know if he was pushing forward or somebody else was, but the idea of, hey, that IRS kind of knows how much money I have already. Can't they just send me, hey, Colin, if this is what, here's your standard deduction and here's how much money you earned. And so we think you owe this much in taxes. If you agree, then sign it and send in the check. Otherwise, you can go to TurboTax and fill it all out, or H&R Block, you know what I mean? Mm-hmm. And if it was very, very simple, so we could do away with all that extra work, I think that would make a big difference. That would be, for me, a big part of the ideal tax system.
Yeah, and I it's funny, we're agreeing more than we're disagreeing in this conversation. I think that one of the unfortunate aspects to our present tax system is that we keep on getting additions and annexes and new floors built and new decoration added, and no one ever stops to say, wait a second, let's clean things up a little bit. Let's cut out the fat. Let's figure out where the rooms that are not being used and demolish those rooms and really go back to the core structure and start fresh. And so we end up, every single election cycle, there's a bunch of people campaigning on cleaning up the taxation system. And it never happens. And I don't quite know why. It seems like it's the one thing that everyone agrees on, but no one wants to do anything actually about it. And I don't understand why. And in fact, I think another thing that you and I will probably agree on right here is that our present tax system is probably not the most efficient or effective that it could be. Would you agree?
I would agree, yeah.
Okay. Because I want to show you this graph that I found. There it is. So this is our present tax brackets, 2021. And so if you look at between the second and the third line, you got a 12% marginal tax rate. And for simplification of the whole thing, look at the far column for a single person, 12% tax bracket. From essentially $10,000 to $40,000, you're paying 12% taxes. The next tax bracket jumps 10%. And so if you're making $40,000, you're paying 12%. If you make $41,000, you're paying 22%. And that 22% tax bracket lasts for $45,000. In other words, someone making $86,000 is paying the same amount of tax, same percentage tax as someone making $41,000. I mean, it's just obscene the way that the whole setup.
You said the same amount. I think you meant the same rate.
The same, you're right. I'm sorry, you're right. The same rate. And of course, that's marginal. So
and it's marginal because the first 40,000, So on average, somebody making 41,000, their average tax rate, their actual tax rate, like if you divided their taxes or if they divided their total income into it, it would be a much lower rate than somebody making 85,000 or 86,000, right?
You're right. So let me restate that. So if you're making $41,000, 40,500 of that is taxed at 12%. Not even, because there's a $10,000 before that. So $10,000 is taxed at 10%. From $10,000 to $40,000 is taxed at 12%, and then everything over 40,500 is taxed then at 22%. It's a very large window, the very large bracket of the tax payments, and from there on up, the jumps in tax brackets get smaller and smaller, and some of the windows also shrink a little bit. As you go forward, it doesn't make a lot of sense. There's no reason why you can't have, if you were going to do a progressive tax rate like this, a 12% tax rate, a 15%, a 20%, and jump it incrementally, because as you were talking before about some of the benefits you get from things like Medicaid or the marketplace, some of these jumps can you obviously at 40,000 to 41,000, there's not going to be a huge difference in the amount of taxes that you pay, but there will come a point as you get up near like 45 or $50,000 in income for a single person that you're actually going to have less income than the person that makes $40,000 because of the amount of money that you're paying in taxes. And I don't quite know where that number is, but it can, or maybe the increase in tax and income is much smaller than you would think, considering how much more money you're making.
Yeah, you wouldn't make less money, but you're just growing. Yeah, you're in, even though you're I don't know if you want to say working harder, you're just making more money, but you're getting less of it.
Right.
Yeah, but you're still going to make more money than them. I mean, it's still only, even though it jumps up 10%, so you get to keep 78% of it, of everything over it. So you still get to keep 78%, so you're going to make more money than them because it's only that last bit that you get taxed at 22%. But yeah, I take your point. It's kind of a disincentive, one that probably people don't see very much, but it is something to think about.
I think anytime as you go through your working career, you hit this point where, wow, I'm making so much more money. And then you see your paycheck and saying, why isn't it so much more? And it's because of the tax brackets that happen as you go through those tax brackets.
Well, it's interesting. There's some truth to that, I guess, but it's interesting. I think people just have the way we set up the tax system. I'm sure it wasn't, I'm guessing it wasn't intentional, but then maybe it just kind of ended up this way because of the unintended consequences that they kind of like. I mean, a lot of people, you have a conversation with them and they want a big tax refund. Like, oh, sweet, I got a lot. And they think that they paid a lot of taxes if their tax refund isn't big. And I'm like, well, all that means is you gave them more of your money or less of your money. Like, we still don't, I'd have to look at how much money you paid in taxes to see whether you had a higher tax bill this year or last year. Like, they don't know. Right. So I don't know how much disincentive there is for them. I mean, there could be some. But anyway, yeah, I think we definitely should clean that up. And I think a sales tax would work so nicely because we could see it so clearly. Like you say, there'd be so many benefits. Like you were talking about the saving. People would then be more inclined to save because, if they spend it, that's when they get taxed. Wealthy people would pay so much more because they're spending money they don't even think about with vacations and, even expensive restaurants. They can just go out and spend a lot more money. So I think that would be a much better way to do it. Yeah, and when we look at those tax brackets, it isn't, I didn't know that the first 10,000 you really get taxed that much. 10%, that's pretty amazing. I guess there's probably some, and maybe that's just because, what would be interesting is to look at a chart that shows us exactly how much tax they're actually paying, because they probably get some, how much of even for a single person, there's a standard deduction, so they get some of that written off. Mm-hmm. And then if they have any kids, I guess if you're single, but even if you have kids, you get some of that written off. And then if you get some transfers like welfare or food stamps, which you would at that, you definitely would at those, even below 30,000, you'd get some definite transfers. So, and sometimes I think we look at these tax rates and these tax brackets and we think, well, man, the poor are paying a pretty good portion. Even at 10%, that seems like, man, if you're making, $10,000 and you got to pay $1,000 to taxes, that would be crazy. Yeah. But when, it's not really $1,000 because you're getting so much money back in transfers from the government.
Mm-hmm. And that speaks to the complexity of the system, which it is. It's just a nightmare how complex it is. Now, I'm going to bring up a subject, and you did touch on it, and I think this is one that we're probably going to disagree on, and that is that I do think there should be a bit of, if somebody were to decide incorporating a sales tax, I do think there should be a certain amount of progressivity to it, where at certain thresholds, that certain products, that we call them luxury products, that there should be perhaps a higher tax. Now, the hard part, of course, to determine what point that's going to happen. If we use, for example, as an example, cars. There's a whole range. If we talk brand new cars, there's a whole range in prices in cars, and that at a certain point, and that whatever that line might be, most people consider certain vehicles over a certain price point being a luxury vehicle, with the exception of certain work vehicles, like a semi tractor trailer, wouldn't be considered a luxury vehicle, even if it's priced the same as a Rolls Royce. And I really really have no idea what those things cost. But if you consider the category and decide at a certain if you consider like a bell curve or a normalized curve, at a certain point, let's say that that the 75% and lower prices in that particular vehicle class, we would consider a normal priced vehicle, and then everything 25% and above would be considered a luxury vehicle. Then you would then be able to, that would be taxed a little bit differently. Now, of course, what will happen is you'll have all these manufacturers, if that were the number, aiming for 74%. Trying to hit the number just below so they can, but as they do, it's going to shift where that line actually happens. And so there will be some that'll play the game and they'll try and get underneath. There will be some that will try and manipulate the system in other ways. But the biggest challenge, not just with this, but with a lot of other government programs, is it's very difficult to go in, assess, and modify the existing program. So that once you find out how people are gaming the system, to then say, okay, we see they're taking advantage of this loophole, like when people are using Hummers as their work vehicle and getting the tax break that was supposed to be going towards plumbers and carpenters, and so no one is ever able to say, well, we see how this is being gamed. Let's fix this. They couldn't, they wouldn't. I don't know which one it was, and so we can never go in and reassess and adjust.
Yeah. You were right that we found a place to disagree. I mean, I guess the first thing I would ask is why. So, I'm not saying, we did talk about some level of progressivity, and the first level would be, some sort of negative income tax or the transfer programs that we already have in place. But what is the argument, if you could encapsulate the argument for having a progressive tax system, what is it?
The argument, before we had this conversation, I didn't do a lot of research. I did a little bit. And when they rate in the rating of countries around the world as for the most supportive of entrepreneurs, and the three places that I went to, the US was rated number 3 on 2 sites and number 1 on the 3rd site. So the US is very supportive and encouraging towards entrepreneurs. And so we live in a society that is helpful, that is encouraging, that makes it easy for people to move in that direction. And so when people find success, it's their way essentially of paying back, not the government, paying back society for all the opportunities that have made their success possible. And that includes things like a well-educated, not just a well-educated middle class, a fairly well-educated lower class as well, that we live in a pretty safe environment, unless you're going to school in Texas. But
it's pretty safe there too.
What's that?
It's pretty safe there too.
For the most part, it is. For the most, yeah.
I mean, you cut me a break. It's like, the numbers are minuscule. A lot more people are killed in other ways. Yeah,
but okay. I don't want to. I derailed it. That was my fault, and so I'm not gonna. I'm just gonna go back quietly to where I was going. All of these things mean that we have we have the possibility of a fairly upwardly mobile populace and economy. And so the reason why people that make more money, make a lot more money, should pay a little bit more is because they're reaping the benefits of that society.
And I mean, obviously wouldn't you agree that, I'm not saying this disproves your point, but wouldn't you agree that they're giving back already with their innovation, the jobs they're providing, opportunities for other people, for other businesses? I mean, some of that is like, there's just a trade-off here. It's like, hey, I mean, and you say they owe something. I mean, I don't know. It just seems to me, it's like, hey, we haven't treated you poorly, so you owe us something. I don't know. It's like, no, you should, like, it's in everybody's best interest for entrepreneurs to be encouraged. And I don't even know what that means. Like, a well-educated populace, well, everybody benefits from that. Like,
Sure.
The people that are educated, like, whether that you're successful or not, I don't know. Like, I kind of take your point, but, we just want them to do what they're doing. So, and it's such a hard thing to quantify. It's almost like saying, well, you did well, so you owe us because we have a good society here. Like, I don't know, we all owe for taxes. I don't know why they would owe a higher percentage than anybody else.
Well, I mean, and of course, this is the big debate: the progressive tax system versus, is it proportional? Is that the other one? Proportional tax system?
Yeah, I guess so.
I think that's what
Well,
it's
just
called.
flat. I would just say flat. Maybe is the other one, because flat ends up being proportional. In the sense
Right.
that if the rate is flat, then yeah, I guess maybe proportional is probably right, because a flat might just be like we all pay $2,000 a year or something,
Yeah.
which is
I'm pretty sure I've got the word right. That the progressive means that as you make more money, you're paying a larger percentage of your income into the tax system, and a proportional means that everybody pays the same proportion, the same percentage of their tax into the tax system.
yeah. I always have struggled with the idea, that we would say it's almost as if it just becomes, and that was why in the first discussion on taxes I discussed redistribution of wealth. It's almost as if we're saying, well, we think you did too well, so we're going to give it to somebody else, which, I mean, that's what welfare typically is, but it's odd that we want to go to at what lengths will we go to do that?
Mm-hmm.
For example, we say, well, I mean, you could say that about just about anything. You did well because we took care of you well, or because we're friendly to entrepreneurs. Well, you look at the other people and say, well, why weren't you an entrepreneur? We wasted our money on you. We're going to make this other guy pay for. He did well with it. She did well with it. She was a great entrepreneur. You did poorly. Okay, we don't want you to. We're going to reward you for that by taking money from him. I mean, there's all sorts of ways you could look at this, but I guess what I would say is, I mean, I don't think anybody's saying no progressivity. I mean, certainly the negative income tax would allow you to have some progressivity, certainly at the bottom. But I feel like we're far too concerned about ensuring that people pay. The word fair share is such a nebulous term; it's impossible to quantify.
Absolutely.
And for us just to say, well, these guys did well, so I think they should pay more. Well, how much more? I don't know. They are going to pay more proportionally. So I wouldn't say like a flat tax in the sense that, if we had a sales tax, everybody pays 15 or 20% or something like that. Maybe it's a little bit different, but I don't know. Maybe we should just pay 20% and then have some transfers at the bottom, and that would be enough. I mean, and if you want like, I don't know, either a wealthy person or a poor person could be more frugal and pay less taxes, or they could decide to spend more, whatever they want to do. It's up to each person. They could make it their tax. They could kind of have some control over their tax bill a little bit.
Well, and I think it can be helpful to look at other nations and see what they're doing. And I'm not saying that we need to toe the line and do as everyone else does. If all the other countries were jumping off of bridges, I'm not saying the US should go and jump off a bridge. But it is worthwhile to look at other tax systems and see, is it effective? And what the system is, and how is it impacting the populace? And the U.S. there's when I looked up, if I recall correctly, the highest tax bracket, and the U.S. was ranked 10th, I think, 10th or 11th. There were 9 or 10 other countries that had a higher percentage that the highest tax bracket would pay. And then I looked up capital gains, which is what you would pay on stock market investments, or on when you sell your stocks. And we ranked at like 20th or so, give or take. So our tax, as far as taxing the wealthy, we're near the top, but we're not the top. And so there's other countries that are taxing even more. And I'm not saying that we should be at the top. All I'm saying is it is worth looking at how other people are doing it, and what those other countries are, and what the other economies look like, and how they compare to the U.S., and maybe taking some guidance from them and how they do it.
I don't know. That's kind of like the argument. Well, we should look at them and see. Like, we should look at them and see what all the unintended consequences are, what all the results are, what society they have, and everything else. One time you and I were talking. Everybody talked about the Scandinavian countries and their democratic socialist programs or whatever. I don't know. And they are very, it's come out recently that they're actually very competitive marketplaces, and they have a lot of a pretty well developed free market. But one of the things you and I were talking about at one of those times was maybe this is kind of off topic, but the idea, like, we should just think about all the unintended consequences, because sometimes, yeah, they have a great program. We think, well, we could do that, but what are the consequences of it? And when we were talking about Denmark, it's something like if you made over $60,000, your marginal tax rate was like 60%. I mean, it's crazy. Mm-hmm. And what does that mean? That means that nobody is going to be, it's going to be very incredibly difficult to climb the economic ladder. You're going to have poor people that stay poor, because once you start making a lot of money, almost all of it is gone. Now, it's great that it goes to social programs. You don't have to worry about healthcare and everything else, but you're not going to generate a huge amount of wealth and be able to build a huge company, like a Microsoft or something, if 60% of your income is going back to the federal government. So we should think long and hard about all those tax rates, what the unintended consequences of it are. I think it's healthy to look at other countries, but I think sometimes we take a very broad look and we say, look, they have high tax rates and their economy is doing well, so we should do the same thing. No, we need to dive in a little bit and really figure out exactly what's happening. Is there a lot of economic mobility? How homogenous is that society? We have a very heterogeneous society. A lot of new people coming in. There's, it's a very different place than some of these other countries. Our immigration is massive, which is great. I wish it were all legal, but I'm happy that they're coming, and I wish we made it easy for them to come legally. Like, it should be easy, because they're great. Like, they're going to add a lot to our society. But we should weigh all those things when we look at these different societies. Does that make sense?
I totally agree. I think that you're right. We don't want to look at 2 data points and say, from these 2 data points, we can go and make some decisions about the direction of our country. We need to be looking at 50 and 100 data points in order to make that happen. And going back to your unintended consequences, I think it would also be really helpful if there was a way to go in and adjust, calibrate, and reset some of these rules are putting in that our government is putting into place, to be able to adjust to some of these unintended consequences. Because once we know what the unintended consequences are, why aren't we changing? And we're getting near the end of our time here, and so I'm going to take my last little bit here, and I'm going to talk directly to all of the IRS agents that might be listening to us right now. If any of the 10 people that are listening are IRS agents here, take this idea to your boss. We often talk about in this country about the fact that cost of living changes where you live. Why don't we adjust taxes to cost of living? Base it on your zip code or whatever. If you have multiple homes, base it on the most expensive zip code of wherever you live, so that your percentage is not just, we don't just assume if you're making $40,000 that you're middle class like you would be in Arkansas, or you're poor if you're living in New York City, but actually adjust the tax to someone that's middle class in Arkansas or someone that's living poorly in New York City. It just makes sense.
Mm-hmm. Sales tax would kind of solve that problem, right? Because prices are lower in that area, so your tax would automatically adjust. Because as you were saying that, I was, as is my wont, I was trying to poke holes in my head and just think, well, how would that work? And it would be very complex.
Sure.
I mean, but with computers, maybe it's doable.
We do it already with all these other things. Where local places have different minimum wages. And that when I go into Lowe's, I get a 5% discount if I use a certain card. So adjustments aren't really all that difficult. Is it complicated? Perhaps. Is it more complicated than our present tax code? I'm betting not.
Well, if you tack it onto our present tax code, then
if you tack it on, you're right. All right, we got a minute 20 left. A minute 20 seconds left. You got anything you want to throw into it, Colin?
I'm trying to think. No, I think I'm good. I think. I think that was a good discussion. I think we did have a lot of agreement, and I think we should think long and hard about all the unintended consequences because I think that sometimes gets left behind.
Yeah, I would agree. All right. If not this time, maybe in one of the new future discussions, talking about cryptocurrency, if you have an interest in doing that.
Yeah, we can do that. I'm not an expert. Well, I guess I'm not an expert on any of this stuff you talk about.
We don't have to. We just have to talk with authority. That's all that matters.
Right. Okay.
All right, talk to you later, Colin.
See you, Brian.
We hope you learned something in this episode of Brother versus Brother, a podcast about difficult conversations. We also hope that you enjoyed it enough to subscribe to the podcast. You can help us by spreading the word. Share this episode on your favorite social media so that others will have an opportunity to experience it as well. You can also support us by donating through Patreon. This information and more can be found on our website, broconvo.com, and on our various social media accounts. Thank you.